Hello, everyone, and welcome back to the Mr.NoBody channel. I'm Rana, and in today's video, we'll be diving into the top 11 markets that I'm currently analyzing using the Elliott Wave principle. Whether you're a seasoned trader or just getting started, we'll break down key insights across various time frames to help you stay ahead of market trends. Make sure you stick around to the end for my final thoughts and predictions. Let's get started. Let's take a closer look at the Bitcoin market on the daily chart. The new bullish cycle began in November 2022. By analyzing the price action, we can identify 5 bullish waves. 1. The first wave is a leading diagonal. 2. The second wave appears as a double zigzag. 3. The third wave follows an impulse pattern, characterized by the acceleration of the first wave. 4. The fourth wave manifests as a simple zigzag. 5. The fifth wave expands, demonstrating a greater advance than the previous 2 waves in this impulse pattern. In our bullish scenario, the first wave has ended. The second wave is formed by a classic zigzag pattern, which consists of an expanding diagonal in wave A, followed by a sharp correction in wave B, and wave C takes an impulse pattern. This ultimately completes the second wave at a larger degree, correcting between 38.2% and 50% of the first wave. Currently, the price action is showing a leading diagonal pattern, followed by a sharp advance in the third wave, which is likely not complete yet at the microwave level. After this, we expect a pullback to finalize the fifth wave at the peak of the first wave of a larger degree. Following this, a correction may occur, which could be shallow and rapid, aligning with the 8-wave cycle. Price action should remain above the levels that would invalidate this analysis. Therefore, we can expect the sequence of the third wave, followed by the fourth and fifth waves, to complete the third wave in the previously identified large. To further examine the current price action, I analyzed the 2-hour chart. The initial wave, known as a leading diagonal, has already experienced a shallow pullback. The price action leading to the wedge breakout can be interpreted as microwaves 1 and 2 within the impulse wave pattern of the third wave. We anticipate the third wave to advance between 161.8% and 200% of the first wave, thereby completing the third wave. Following this, a corrective pattern for the fourth wave will emerge, leading to the next higher wave and ultimately completing our first impulse pattern. After this, we expect 3 corrective waves to complete the 8-wave cycle. These retracements may be shallow or deep, but usually end close to the fourth wave, before we observe a bullish retracement. I have illustrated the current schematic and urge you to pay attention to the key price levels relevant to this analysis. We will examine the third wave of the gold market. The bullish rally began in November 2022. The first wave was an impulse pattern with an extension within wave 1, while the second wave formed a double zigzag, retracing between 50% and 61.8% of the first wave. The third wave began with patterns 1 and 2, which were accompanied by further expansion, ultimately peaking at $2,801 in the gold market. As discussed in recent weeks, I anticipated a corrective pattern would emerge. Currently, we are experiencing a wave in the bear market that is likely nearing completion. In the short term, we can expect a corrective pattern to form in the bull market, followed by another wave in the bear market. However, it's important to note that if this fourth wave is an impulse pattern, it may evolve into a lateral pattern due to the periodicity between waves 2 and 4. For a more precise analysis, check the 15-minute chart. Wave A is a leading diagonal, Wave B is a simple zigzag, and Wave C is an impulse pattern that completes our Wave W. This sequence is followed by a sharp pullback, which I have identified as a rudder zigzag. Again, we see an impulse pattern that forms Wave A, with Wave B being a simple zigzag as before. Wave C also manifests as another impulse pattern that finally forms a double zigzag, comprising 7 swings, resulting in our larger Wave W. This wave has advanced by 123.6% compared to its previous wave. It's important to note that this could have been interpreted as an impulse pattern. Our current expectation is for a pullback between 50% and 78.6%. The pullback may occur quickly or follow the schematic I've drawn, but it shouldn't deviate significantly. The key price for our analysis suggests that once we hit that level, continuation into the bear market is likely. Additionally, I would like to emphasize that our fourth wave pattern may take the form of a sideways pattern, such as a triangle, a flat, or a complex combination pattern. Today, I am revisiting the daily chart of the S&P 500. The first wave is identified as an impulse pattern, showing an extension in its third wave. I have determined the second wave, wave A, to be a leading diagonal pattern, which is corrected between 38.2% and 50%. I want to analyze the third wave as a classic pattern. Waves 1 and 2 have formed twice, leading to the third wave, which contains an extension. The fifth wave has moved beyond the third wave and is slightly longer than the first wave, consistent with the guidelines and rules of the Elliott Wave principle. Additionally, the advance of the third wave is equivalent to 100% of waves 1 and 2. We may have entered a corrective phase with the fourth wave. This wave should not trespass into the territory of the first wave and should correct between 23.6% and 50% of the third wave. The key price level to confirm a bearish market would be the breakdown below microwave 4 of wave 5 in the third wave. I am also examining the third wave in more detail on the 4-hour chart. Here, the first wave is classified as an impulse pattern, while the second wave is a flat running pattern. The third wave has an extension, with the third wave advancing by 138.2% compared to waves 1 and 2. And the fifth wave advancing by 61.8% relative to the third wave. Notably, the second and fourth waves exhibit periodicity, and the fifth wave is composed of 5 waves. Currently, we may be entering a bearish market phase. It's essential to note the key price level that would invalidate this analysis. If the price fails to hold above the fourth wave, it would serve as a strong confirmation, and exiting the final channel of the green light impulse pattern is crucial for anticipating further declines in the market. The fourth wave might also form a sideways pattern, but initially, we are looking for 3 waves indicating a bearish trend. On the 2-hour chart, I am focusing on the fifth wave. As shown, the first wave has completed with an extension into its third wave. The second wave is a simple zigzag, and the third wave concludes with an extension into its fifth wave, while the fourth wave is a multiple zigzag. The completed fifth wave shows that wave 1 is longer than wave 3, and wave 3 is longer than wave 5. After a breakdown of wave 4 in this impulse pattern, we anticipate an extension in the bear market. Remember the key price level that would invalidate this analysis. I have also explored the potential for an extension in the bull market on the 1-hour chart. In recent weeks, we've considered the possibility of the fifth wave extending further, which may occur now. A leading diagonal pattern has completed the first wave, followed by a double zigzag pattern for the second wave. Currently, the price action reflects the first wave of the third wave. This pullback must not exceed the key price level that would invalidate our analytical idea. Once we break above the previous market peak, we could see an extension in the bull market, reaching our set targets, possibly with increased momentum. The euro to US dollar pair has been forming an impulse pattern since September 2022, with an extension within its third wave that reached its peak price. Following this, we experienced a decline in the bear market, and the 3 waves served as connectors. Currently, we are looking for the completion of a larger corrective pattern for wave B, which will ultimately be equal to wave A of this pattern or potentially advance further. At present, it appears that we are in wave C of the impulse pattern, situated within the range of 38.2% to 61.8% of the larger corrective wave. This suggests that we will see another wave in the bull market, at least enough to complete a zigzag pattern. Let's analyze the 4-hour chart for a more detailed look at this zigzag pattern. I have identified wave A as a triple zigzag consisting of 11 swings that have already been completed. We have also observed 3 waves in the bull market, formed by a double zigzag, with each wave containing multiple zigzags. The current price action is classified as an impulse pattern based on the available data, and we are presently in its 3rd wave. After this wave's completion, a corrective pattern is expected to emerge that does not encroach upon the territory of our 1st wave, adhering to established rules. It may also be equal in length to the 1st wave. Finally, once the 4th wave is completed, the market is anticipated to advance once again into the bear market, with the next wave possibly being shorter than the previous 2 waves. This will likely complete a zigzag pattern and conclude inside the corrective channel or slightly lower. Let's examine the 30-minute chart to analyze the impulse pattern of wave C in more detail. The first wave has been completed, displaying an expansion in the 3rd wave and a truncation in the 5th wave. The 2nd wave is a double zigzag that has corrected only slightly. Currently, we are in the 3rd wave of the same degree, and we expect another downward movement to complete the impulse pattern. At present, the 3rd wave is nearly equal in length to the 1st wave, but it has not yet been completed in the smaller degrees. Following the completion of the 3rd wave, we can anticipate any type of corrective pattern. This corrective pattern may be either shallow or deeper than the 2nd wave, but it should not extend into the territory of the 1st wave. After this correction, we should expect to see another decline until the corrective pattern is fully completed. The dollar index, which is inversely related to the euro against the dollar, has completed the impulse wave A pattern within our final channel, albeit in a bear market. Following this, an impulse wave emerged in a bull market, and a zigzag pattern was formed as a connector that corrected 90% of wave A. Currently, there is high momentum in the price action, which is expected to advance to a price range between $107 and $110, or potentially complete within the channel as a simple zigzag or slightly above it. Subsequently, another decline in the bear market is anticipated, corresponding to the amount of wave A, ultimately resulting in the completion of at least one simple zigzag pattern. It is important to note the key price levels that would invalidate this analysis. Now, let's examine the 4-hour chart. Wave A represents an impulse pattern, while on the Euro-US dollar chart, it is interpreted as multiple zigzags due to violations of the Elliott Wave principle. However, wave B in this pattern also shows some minor differences in its construction, which in this chart appears as a simple zigzag pattern. The current price action has been bullish, but the price movement has been relatively shallow. Typically, this type of impulse pattern can occur within a zigzag pattern. We are currently in the 3rd wave of this pattern. It is expected that after completing wave 3, we will experience another correction that respects the boundaries of the 1st wave. Following this, to complete the 5th wave, another advance in the bullish market is likely. Next, I have analyzed the 30-minute chart of wave C. It mirrors the Euro-US dollar chart, with a slight difference in the structure of the 1st wave, which has an expanded 3rd wave. The 2nd wave is a double zigzag that is corrected by only 23.6%. An acceleration gap exists in the 1st wave of the same degree, alongside a corrective pattern and an extension of the 3rd wave. However, the volume of this extension still does not equal that of the 1st wave, indicating that the base channel has been exited. The 4th wave may become more complex, and ultimately, another bull market wave will be necessary to complete the details of the 3rd wave. After this, we will anticipate a corrective pattern, which may be shallow or deep, followed by the 5th wave of this impulse pattern, leading to new price action once again. I have analyzed the correction in the crude oil market price on the daily chart, which has been occurring since the start of the correction phase in June 2022. I consider wave A to be a triple zigzag with 11 swings, while wave B is a simple zigzag. For the next wave, I have made a slight adjustment. I view each of the waves as a triple zigzag, which will eventually form a simple zigzag pattern. Currently, it seems likely that we will see another wave move downward, hitting the lower line of the drawn channel. This will reach between 2 target points, after which we can expect a corrective pattern similar to the previous wave X. Following that, we may experience another decline in the crude oil market before ultimately seeing bullish price action. To examine Wave C in more detail, I have included Chart 4. I would like to emphasize that I have labeled the patterns based on microwaves, and all the microdegrees will not be complete until the impulse concludes. For this analysis, I have identified Wave W as a triple zigzag and Wave X as a double zigzag. However, Wave Y in each of the microdegrees is a simple zigzag, with corrections occurring between the 61.8% and 78.6% levels, followed by an extension in the bearish market. Meanwhile, the price has remained within the drawn channel, and it seems that another downward wave is necessary to complete Wave Y. After this, we will see a corrective pattern relative to the current advance, followed by another wave down to complete a triple zigzag that finishes our Wave C. If this occurs, we may witness an advancement in the crude oil market toward bullish territory. I advise everyone to be cautious regarding the key price levels that could be invalidated. I have analyzed the NASDAQ 100 market using the daily chart for a closer examination. The first wave is completed by 5 smaller waves, with the third wave containing an extension. I considered Wave 2 as a simple zigzag that has been corrected by approximately 61.8%, ending near the second wave of the first wave impulse pattern. Similar to the S&P 500 market, I am currently favoring the third wave based on a classic impulse pattern. The first wave takes the shape of an extended diagonal of a larger degree, while the third wave shows an extension, which supports the correctness of my analysis. The fourth wave appears as a sharp zigzag pattern, followed by a bullish advance, completed by 5 waves. The third wave of a larger degree is almost equal in length to the first wave, and it has reached the upper line of a drawn channel. It seems likely that we have entered a correction phase for the larger fourth wave. This correction may manifest as a sideways pattern, such as a triangle, flat, or complex combination. To comply with the impulse pattern, it should not enter the territory of the first wave. Afterward, the market is expected to continue bullishly to complete the fifth wave of the same. Since October 13, 2022, we have seen a new cycle in the bullish market. Based on my labeling and analysis, the third wave has an extension. Each wave, for example, has 5 completed waves in the first segment and a clear retreat. The third wave is nearly equal in size to the first wave, while the fifth wave is shorter than the previous 2 waves, signaling the completion of the third wave at a larger degree. The fourth wave has corrected deeper than the second wave. Typically, in a classic impulse pattern, the first and fifth waves are equal, but currently, the fifth wave is slightly ahead. We are now expected to be in a larger Wave 4 corrective pattern scenario. A price break of Wave 4 and Wave 5 could confirm bearish price action that will ultimately end near Wave 4 of Wave 3 if it adheres to the rules of the impulse pattern. Additionally, an exit from the final channel of the impulse pattern can serve as a more reliable signal. The key invalidation price must be maintained in this analysis. I have also examined the 2-hour chart to determine if the fifth wave has been completed. The first wave contains an extension within the third wave, followed by a double zigzag for the second wave. The third wave has transitioned into a final diagonal, while the fourth wave is a simple zigzag, and our final wave, Wave 5, is an impulse pattern that has been completed. It is crucial to monitor the invalidation price. Any bearish market price action that results in exiting the final channel or breaking the price of the fourth wave should be considered a pullback in any type of correction. The key invalidation price must be adhered to, and a continuation in the bearish market should be anticipated. However, a sideways pattern may occur, but we must first experience at least 3 waves in the bearish market. We will also explore a bullish scenario that we have calculated in recent weeks on the 2-hour chart. By examining the price action that has occurred from the beginning, along with watching recent videos, you will gain a clearer understanding. We observed 5 upward waves, which we view as a leading diagonal, followed by a flat correction for the second wave. The subsequent price action should be assessed through the key price mentioned earlier, and once the previous peak price is broken, we will consider the continuation of the fifth wave and reaching the set targets. For now, it remains within our base channel. Another potential scenario for the fifth wave could involve a retreat with 3 waves, followed by renewed bullish price action. We will share any changes to this analysis if needed. Let's take a closer look at the Ethereum market, starting with the daily chart. June 2022 marked the beginning of a new uptrend. The first wave formed a leading diagonal pattern, followed by a second wave that displayed a sideways pattern. Subsequently, the third wave emerged, which confirmed the validity of the leading diagonal pattern, as price action tends to move quickly after such a formation. However, the third wave reached its peak, leading to the appearance of the fourth wave, characterized by a simple zigzag, before culminating in the fifth wave, which showed signs of shortening. In this context, the first wave represents a larger degree, followed by 3 corrective waves, all of which are simple zigzags. These corrective waves have been completed, with the second wave, at a larger degree, retracing between 50% and 61.8% of the first wave. Currently, the price action shows a structure consisting of 5 upward movements followed by 3 corrective waves, indicating that we may be approaching the completion of the third wave sequence on a larger scale. It is crucial to consider key price levels as indicators for invalidating our analysis. Additionally, the third wave sequence may be relatively shallow during a correction and could conclude near the fourth wave of any structure before experiencing rapid. Now, let's examine the 2-hour chart for a closer look at the current price action. As you can see, I have labeled 2 patterns, 1 and 2, which represent the third wave of cycle 2. We anticipate a further upward movement for the third wave, followed by a fourth correction, and then a final fifth wave in the impulse pattern. After that, we may observe 3 corrective waves that could either be shallow or deep before the bull market resumes. Let's take a look at the daily chart for the US dollar to Japanese yen currency pair. Since January 2022, the market has experienced a bullish cycle. Wave A appears as an expanded diagonal, while Wave B is characterized by a triple zigzag. Lastly, Wave C has exhibited an impulse pattern, completing an extension between 78.6% and 100% of the previous wave, which marks the conclusion of our first wave. The second wave retracement, which took the form of a multiple zigzag pattern, ended between 61.8% and 78.6%. Typically, such a depth of correction occurs in the second wave of an impulse pattern or in the second and fourth waves of a diagonal pattern. However, the current price action indicates that we are completing an impulse pattern based on the available data. If we are indeed facing an ending diagonal, we can expect to see a simple or multiple zigzag forming a retracement in the direction of the previous advance following the completion of Wave A. Subsequently, we should observe new price action indicating a bullish market. It's important to maintain the analysis's invalidation level. I also reviewed the hourly chart and would like to share my observations. I consider the first wave to be a leading diagonal, while the second wave appears as a flat expansion pattern. The third wave occurred as the first wave advanced and extended. It is in the same degree as the first wave. The next wave is another impulse pattern that has completed our third wave. It seems we are currently in the fourth wave. This correction may be sufficient, with one more wave expected in the bullish market. Please keep in mind that this fourth wave should not enter the territory of the first wave, and it is likely that the base channel will provide support for the fourth wave, allowing for another upward wave thereafter. Let's examine the natural gas market. According to my analysis, I consider the first wave in the larger pattern to be a leading diagonal. This is because all 5 waves have formed an impulse pattern, with waves 2 and 4 showing sharp pullbacks and corrections that completed our first wave in the larger framework. As you can see, this completion aligns with our drawn channel. Wave 2 is a simple zigzag, corrective wave, which is also sharp. It's important to note that our second wave in the larger degree has completed within our corrective channel and has not exceeded the first wave. Currently, the price action may be forming a three-pattern cycle of waves 1 and 2, indicating that the market is maturing and is advancing towards $6.799. Of course, this is based on a daily chart, so it will take some time to unfold. The beginning of a new bull market cycle started in February 2024, as mentioned in our previous videos a few months back. This illustrates that the Elliott Wave principle is applicable to all financial markets and is not as complicated as some might claim, although it can be challenging. The impulse pattern that completed the first and second waves resembles a triple zigzag, suggesting that we may currently be in the second wave. We could see another structure similar to the previous one, comprising waves 1 and 2. However, the key distinction for the second wave is that it appears as a simple sharp zigzag, corrected between the 61.8% and 78.6% retracement levels. The next price action is expected to be an impulse pattern. The second wave could either remain a simple zigzag or shift into a flat pattern, likely within the channel. Exiting the corrective channel and breaking above the previous peak would confirm the start of another wave at the same degree. Furthermore, breaking out of the base channel could signal a clear upward move, positioning us to complete the third wave on a larger scale. It's crucial to remember that key price levels should not be invalidated, and every price action should be accompanied by a corrective pattern. To examine the silver market in detail, we turn to the daily chart. It's worth noting why we consistently use the daily chart each week, even though there are fewer viewers focused on this time frame. This is because the price waves tend to move in a larger trend direction. Now, let's proceed with our analysis. We have identified 3 cycles, 1 and 2, and the conclusion of our smaller cycles, 1 and 2, completes the third wave. This wave was finalized at a larger degree, and ultimately, the last 5 waves of this third degree finalized the larger wave. As reported in recent weeks, the third wave has been completed. Currently, we are in the corrective phase of the fourth wave, which has finished the A wave and is now awaiting any type of correction. If it maintains at our key price of invalidation, we will see another wave pattern in the bearish market, likely in a zigzag format. It is also important to note that the fourth wave could form a sideways pattern to observe alternation. It must end near the fourth wave of the third wave while avoiding a move into the territory of the first wave of the larger degree. Now, let's take a closer look at the 15-minute chart. The first wave is a leading diagonal, and the second wave can be identified as a simple zigzag pattern, though it may also be interpreted as a multiple zigzag. The third wave shows an extension, representing a classic impulse pattern. Finally, the fifth wave is slightly shorter than the first wave of this impulse pattern, which establishes our wave structure at a larger scale. As you can see, exiting from the final channel of the impulse pattern can confirm the beginning of at least a short-term correction in the bullish market. This correction may take the form of either a simple or multiple zigzag, but at a minimum, a simple zigzag should occur first, concluding within the range of 38.2% to 61.8%, or possibly 78.6%. Following this, we anticipate another wave in the bearish market. Please remember the key price level from our analysis. Thanks for tuning in, everyone. I hope you found my analysis of these top 11 markets insightful. Don't forget to like, comment, and subscribe to the channel for more updates and detailed market breakdowns. If you have any questions or want to share your thoughts, drop them in the comments below. I'd love to hear from you. Until next time, stay informed and keep analyzing. See you in the next video.